Hi, everyone. Thank you for joining me today. I'm Ian Gendler, ValueLine's Director of Research. I will be providing an in-depth overview of Smart Investor, the digital equivalent of our flagship service, the ValueLine Investment Survey. I will also recommend one stock to buy right now. However, my main goal today is to answer your questions. Topics can range from details about ValueLine's products, services, data and analysis, or general investment inquiries. Please type your questions into the Q&A box, and I will answer as many as I can following the presentation. Let's now talk about Smart Investor. This service is a unique source of financial information and is designed to help investors make informed investment decisions that fit their individual goals and levels of risk. The product includes data, information, and analysis on the largest, most heavily traded equities on the New York Stock Exchange, NASDAQ, and Toronto Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and much more. The service is published weekly, but loads of information is updated daily on our subscriber-only website. Each week, we publish full analysis on approximately 130 stocks and 8 industries. These reports can quickly be accessed via the current VLIS issue link on the dashboard. Obviously, with so many reports, finding investment candidates can be challenging. That is why the Smart Investor service includes 5 model portfolios, each one with a different investment objective. The core 4, as we call it internally, are found in the weekly Selection and Opinion newsletter, which also includes economic and stock market commentary, economic data, stock screens, and special features. Just like the current issue, it's accessible via the quick links. The 4 model portfolios are actively managed by senior members of the research department. Each portfolio always contains 20 stocks, and updates are provided each and every week. Here's a quick synopsis of each portfolio. Portfolio 1, stocks with above average year-ahead price potential, is oriented to expected price performance approximately 6 to 12 months ahead. It is primarily suitable for investors who wish to take more risk in hopes of greater returns. Portfolio 2, stocks for income and potential price appreciation, combines an investment objective for above average income with a limitation on risk. It's most suitable for more conservative investors. Portfolio 3, stocks with long-term price growth potential, is based on the fundamental research of our staff of research analysts. It's suitable for investors with a 3 to 5 year horizon. In terms of risk, it falls somewhere between Portfolio 1 and 2. It's also the most flexible with the broadest array of companies. Portfolio 4 focuses on stocks with above average dividend yields. Investors seeking current income are likely to find interest here. A 5th portfolio is also available. It gets emailed to subscribers every Monday morning. If you are a subscriber and not receiving the email newsletter, please call 1-800-ValueLine. The aggressive growth model portfolio was launched earlier this year and should be considered by active trading subscribers who are interested in obtaining market-beating returns over the near term and are willing to accept the significant risks associated with many of the issues we will recommend. Like the others, it is an actively managed, equal-weighted 20-stock portfolio, and updates are published weekly. For those investors interested in doing it yourself, let's move to the screener, which can be accessed under the Browse Research tab. ValueLine subscribers have access to 15 preset screens, as well as 50 fields. I should also mention that dozens of other fields are available, but they require a higher level of subscription. Today, I want to provide some screening criteria that is particularly useful. As I'm sure you are aware, the stock market performed poorly in September, but has fully rebounded and then some this month. Thus, valuations are again rather lofty. Let's find some good quality stocks that don't appear too expensive. Every week, ValueLine ranks the 99 industries within our coverage for near-term performance. The full list is available in the summary and index, which can also be accessed via the quick links. One industry that is highly ranked and caught my eye was entertainment. Let's start there. As you can see, there are 58 stocks within Value Line's entertainment industry. These companies own and operate broadcasting networks, production studios, streaming platforms, radio stations, among other businesses. Since I mentioned that the stock market is priced at a lofty level, I want to reduce the overall risk of our selection. For that, I'm going to depend on Value Line's proprietary safety ranks. The safety ranks measure the total risk of a stock and is arranged on an easy-to-understand 1 to 5 scale, with 1 being the most stable issues. I want to highlight the fact that stocks ranked favorably for safety have, in the past, held up far better than the broader market during corrections and downturns. They also meaningfully participate in up markets. For more information, I encourage you to peruse our ranking system guide, which is available free of charge from within the investment education section of our website. So for this, I only want to focus on stocks ranked 1, 2, or 3. That means they all have at least average scores for safety. I'm purposely avoiding the most riskiest of companies. And as you can see, that removed about 70% of the list. I now want to focus on stock price performance. After all, the goal is to find stocks that offer appreciation potential. For this, I'm going to tap 2 more Value Line fields. First, our time-tested timeliness ranks. Like safety, the ranks rank from 1, highest, to 5, lowest. Although the calculation is purely quantitative and proprietary, I can tell you that it includes a number of variables, including stock price momentum and earnings results. For this, I'm going to focus only on the 1s and 2s, since those are expected to outperform the broader market over the next 6 to 12 months. Once again, more information is available in the ranking system guide. I want to add one of Value Line's newest in-house and unique fields, the 18-month target price range. As the name suggests, it seeks to predict a stock's price over an 18-month horizon in terms of a range. In addition to the high and low values of the range, the percentage difference between the current stock price and the midpoint of the range is provided. The percentage may be thought of as the most likely potential profit. The larger the percentage, the greater the possible price appreciation. The 18-month target price range is only available for the stocks covered in Smart Investor. For the midpoint, I'm going to set the low end at 20%. Thus, according to this measurement, the most likely scenario calls for the following stocks to increase in price by 20% in 18 months. Please note that the present median is 15%. Down to just 2 stocks. I hope this showcases the speed and power of Value Line Screener. With just a few clicks, Value Line's entire database of equities can be reduced just to the ones that fit a specific strategy. Please note that the screens can be saved and accessed later by utilizing the button at the top. Of the 2 stocks, I'm going to highlight and recommend Nexstar Media, ticker NXST. Clicking on the company name will take us to the digital report where the data, information, and analysis is laid out in more than 15 customizable modules or boxes. These modules can be moved, resized, or hidden so you can create your own customized report. Let's start with a quick overview of Nexstar's business. As you can see from the Business Overview module, Nexstar Media is a television broadcasting and digital media company focused on the acquisition, development, and operation of TV stations and interactive community websites. It owns, operates, sells, and services 198 TV stations in 116 markets, reaching 39% of U.S. households. It provides digital publishing, content management, and digital video ad platforms to media publishers and advertisers. From the valuation module, we can get an idea of how the company is performing. Clicking on the double arrows will expand the modules. As you can see from the colored chart, the stock price is the yellow line, NXST moved up nicely earlier this year and has mostly traded sideways since. Taking a look at the financials, and Value Line's estimates and projections are in bold, we see that our expectations are for sales, earnings, cash flows, book value, and dividends to all increase nicely over the years ahead. I now want to share our Analyst View. This can be accessed via the commentary module or from our classic one-page reports. These are available with a Smart Investor subscription, and they can be accessed from the PDF reports link at the top right. According to senior analyst Orly Seidman, Nexstar Media is well poised for the near term. The company registered strong growth during the first half of the year, with the top and bottom lines advancing 12% and 64% respectively over the first 6 months of 2021. Acquisition synergies and restructuring efforts continue to drive results. Likewise, a smaller stock base helped boost Nexstar's share net figures. The company's core advertising revenues, which stumbled during the March period, made a solid comeback during the June quarter, and this combined with robust digital revenues supported its recent performance. Looking ahead, Orly remains bullish, but with some caveats. Toward the back half of the year, we imagine some of the dynamic growth will begin to moderate through 2022. It will likely record softer year-to-year comparisons for the second half, owing to the stellar gains Nexstar recorded at the onset of the pandemic. Plus, coronavirus-related market headwinds, including rising operating costs, as well as higher restructuring expenses, may take a toll. Even so, share earnings will likely climb 10% to 15% on a 3% sales advance for the full year. And the top and bottom line should continue upward at a low single-digit clip next year. Please also note that Nexstar is scheduled to report September period financial results in early November. For the quarter, we expect share earnings of $3.85, which is higher than consensus analyst estimates. If the results mirror our figure and management's guidance is optimistic, perhaps the stock price receives a nice jolt. Lastly, let's talk investor suitability. According to Orly, the shares of Nexstar have wide investment appeal. The issue is ranked to outpace the broader market averages in the years ahead, and it has a worthwhile dividend yield. Moreover, patient investors may want to take a closer look here, as NXST holds substantial capital gains potential and healthy total return prospects over the 2024 to 2026 pull. I also want to add that the stock appears inexpensive. As you can see on the top of our page, NXST is trading at roughly 7.5 times earnings. That is well below its historical 10-year average of 20, as well as our projected multiple of 15. All told, Nexstar, ticker NXST, is one stock to buy right now. Before I take your questions, I want to quickly highlight a couple more features of Smart Investor. The first are our supplementary reports. These are especially important during earnings season, which is going on now. When important news is released that meaningfully impacts the stock price or our analysis, we will immediately publish a supplementary report that gets posted on our website. As you can see, there's a lot of content here that can help you make investment decisions in regard to stocks you already own or are planning to potentially buy. For example, here's the one on Merck that we posted this morning. We suggest that subscribers regularly check this section of our website. Subscribers also have the option of being notified when Value Line puts out such content. So I'm just waiting for the Find Ideas tab to load. Seems to only take a while when I'm presenting. I'm going to be focusing on the Alerts Hub. From the Alerts Hub, subscribers can set up email or text notifications that will inform them when a notable event occurs. In addition to the release of a supplementary report, an alert can be created to inform you that a stock has moved up or down by a specific percentage, or a value line has changed a rank. In all, there are about 20 alert functions. So we can play around with that. I'm going to add an alert or NXST. And you have all these categories to choose from. So since we talked about the company reporting in early November, I'm going to set up an email so I am notified when that supplementary report gets posted. All right, well, thank you for participating in the presentation, and I will now take your questions. The first few came to me via email earlier, so I'm going to tackle those first. All right, first question. Of most interest to me are the critical factors you look toward in making a stock purchase decision, including the decision-making criteria that might evolve given changing market conditions. All right, well, just like the example I provided using the screener, the current environment and changing market conditions are vital considerations when choosing stocks to buy. As a rule, I always consider a stock's valuation relative to the broader market, its peers, and its historical average. Value Line has long preached avoiding overly risky assets, I'll add. Question 2. What are the key Value Line ratings, projections, etc. that a value investor should be using to screen for stocks? Well, I'd start with book value. In our weekly Summary Index, in our screener, and on our reports, we publish various book value measurements. These will show you how book value stacks up against the price of each stock. For instance, in the screener, you can find stocks trading at a favorable price-to-book ratio. To ensure that the stock is now trading below or near book value for good reason, this could signal to ensure that the stock isn't trading at a low book value for a good reason, meaning that there could be an operational problem, I would then focus on revenue and earnings trends. Make sure that both have been heading in the right direction, and according to Value Line's estimates on projections, they're expected to do so in the future. Can you explain what relative price strength is? More specifically, how am I supposed to interpret the number I see on the heat map? All right, well, the heat map is in the industry module, so we can take a look at that for Nexstar. And in the industry analysis module, in addition to an industry overview written by the analyst, you will see a heat map. First, the important thing to note is the size of the boxes. It's all based on market cap. So obviously Disney and Netflix are the largest companies in the industry by far. The relative strength percentage that you see, so for Netflix minus 23%, or Disney minus 9%, is the stock's price performance over the last 12 months relative to the industry average. So Netflix has actually done incredibly well, but over the past 12 months versus these stocks is underperforming. All right, on the one-page summary, so we can use Nexstar for that too. How do you make the determination for which metric you choose for the long-term line for the stock? Sometimes it's a multiple of cash flow, earnings. How does it relate as a trustee indicator? All right, so we're referring to this 12.5 times cash flow. And I see there's actually a couple other questions about why is it dashed. So we'll tackle these all at once. So the multiple, so in this case 12.5, that is derived by our analysts. They look at how the company has traded historically. So for Nextar, we'll easily look at the last 10 years of information. We'll look at what the average is, what the median is, what the spread is between those multiples versus the price for that year. And then we'll look at our estimates and projections and our target price range and see what multiple fits best with all that information. So for Nextar, it's 12.5. As another part of that question, a lot of companies you'll see, instead of cash flow, you'll see earnings. For instance, for a lot of financials that don't have the depreciation piece of cash flow. So that'll be earnings. For REITs and utilities and some other companies, which are mostly for income investors, you'll see dividends being used as the multiple and how that relates to the 10-year treasury. All right, there's also several questions about the timeliness rank. So first, as I mentioned earlier in the presentation, it is a proprietary measure. I can't divulge the secret sauce. However, it does look at numerous factors, including historical earnings results, earnings surprises, cash flows, and stock price action. Important to note that the analysts are not involved in that process. It's a purely quantitative measure. And I see a couple questions are asking about how the ranks interact with our target price ranges. For instance, somebody mentioned that a stock could be well ranked for timeliness, a 1 or a 2, but have little 3 to 5 year appreciation potential. That's absolutely possible. The rank could like a stock for the next 6 to 12 months, and the 3 to 5 year target price range, which is solely generated by the analyst, might think the stock isn't going to go very far out to that period. So they don't conflict. They're generated completely differently, and they're looking at two very different time periods. It's easy to understand that a stock could outperform in the near term, but be nothing special long term. The opposite's, of course, true. All right, another question. Why did you choose Nextar over Live Nation? So of course I looked at both stocks when they were the results of the screener, but I didn't like Live Nation's valuation. Stock's trading presently near its all-time high, and the company will likely incur losses over the next few quarters. So I went with Nextar. All right, let me get some more questions. Does Value Line do any research, recommendations, and ratings on IPOs? Pre-IPO, no, we do not. We don't comment on companies that may hold an initial public offering. We will, however, quickly cover the major IPOs in the Smart Investor subscription within weeks or a couple months of the IPO, but we don't comment beforehand. Going back to the chart about the dashed line, I forgot to tackle that. So the 12.5 cash flow is the historical, and then the dashed line represents the 12.5 times cash flow of our estimates. So for 21 and 22, for instance. All right. Does your stock screener offer technical indicators, searches, oversold, etc.? No, that is not in the screener. We do have another product called the Value Line Investment Analyzer, which has a whole technical charting section. All right. Could you please explain how Value Line calculates its asset allocation model percentage breakdown for stocks and bonds? So there's a proprietary formula there that measures the overall risk of those investments and takes into account our view of the direction of the stock market, and percentages are calculated from that. There's also a human element where it is evaluated and changes are made, but it's mostly a quantitative process. Do you recommend using stop losses on your stock selections? For the most part, yes, especially if you're buying smaller, maybe riskier companies. A lot of people do that in batches. So you might buy 5 or 10, small biotechs or drug companies or things like that. And in that case, yeah, I would recommend stop losses. 20% is kind of a good baseline, but that's highly personal. When a stock you own goes down, stop losses are a good discipline. A lot of people, myself included, don't like to sell their losers. Stop losses can take that decision out of your hands, which in a lot of cases can be a good one. What is the technical rank and how best is it used? So we can take a look at Nextar's technical rank. It's a 3, so it's an average selection. This works just like time medicine safety, ranks 1 to 5, 1 being best, 5 being worst. So for Nextar is neutral. There's a proprietary formula here, but it only looks at stock price activity, basically how the stock has traded over multiple frequencies over the past few years. Basically, it's looking for signs of momentum or floors and ceilings and things like that. Next question. Is the 18-month TPR midpoint updated daily? Yes. On the top of our digital reports, you'll see it here. The percentage is updated every day using the last closing price. So it compares the current stock price with the midpoint, and that percentage changes. The ranges are updated weekly. Are stocks outside of the U.S. markets covered? TSX, ASX, etc. Yeah, we cover several dozen stocks on the Toronto Exchange. There's also a number of Canadian companies that are dual listed, and we will cover them on the New York Stock Exchange, depending on trading volume and how they report their financials, whether it's in US dollars or Canadian. How do I know the success rate for an analyst of a stock? Some analysts get it right, others get it wrong. Would be nice to know perhaps how long the analysts have been with Value Line or some other indicator. So first, we don't judge the analysts on their estimates. Obviously, it's a lot easier to get, let's say, an electric utility right than a drug company. So each analyst's coverage will have a significant impact on the success rate. I can tell you as far as a tenure, the average is more than 10 years. We have a very senior group, which is very nice. All right, next question. How many folks in Value Line proof and validate what is written in the stock reports? Or is that only the analysts involved per stock? No, we have a significant publishing process. Each report is viewed multiple times before it goes out by many different analysts and editors. All right. How should I forgive a bad quarter? Nearly all companies were hurt by COVID. How do I make sure the downturn isn't long lasting? It's a good question because obviously we're looking at, with companies now reporting September numbers, or a few months ago, we got the June quarter. Obviously, in a lot of cases from last year, those are easy comparisons. You're going to want to see, I would compare it first to 2019's, quote, normalized figures. And I'd also look at our estimates and projections to make sure that they're still going to go higher, or at least expected to do so. Is there a limit to how many stocks can be added to the Alerts Hub? Yes, I think for most subscribers, they can have 15 or 20 alerts per category. Higher level subscriptions, there is no cap. Does the beta for Nexstar of 150 reduce the stock's appeal on a risk-adjusted basis? Well, as we mentioned, it's a 3 for safety, which is average. Perhaps a more conservative or a very conservative investor would look at the 150 and be scared off. I wouldn't necessarily argue with that decision, although I do like this company trading at such a low multiple. Do I recommend reinvesting dividends or taking the cash for future potential investments? That is a highly personal decision. If you are investing in a group of stocks to generate money for more stocks, you're obviously going to want to take the money. Reinvesting can be usually profitable if stock prices continue to go higher because now you have more shares. So it really depends on your individual process. Can I sort looking at ADRs or ADS securities? For those of you who don't know, those are American Depository Receipts. You can't search individually by ADR, but in the screener, you can search by domicile code or country code. So you could focus on the UK or France or Japan, which is where a great deal of the ADRs are. All right, you regularly add stocks to your value line review. Are you quietly removing them or adding new when adding new ones? Well, typically stocks are removed when they get acquired. M&A activity is very strong, so we're constantly losing stocks to mergers and acquisitions. Other times, a stock will get so small and maybe the volume will start to dry up and we'll drop it voluntarily. And of course, we're always adding. We added seven stocks to our coverage universe just last week. If we never added, we would go to zero over time because everything gets acquired. There'd be just a few dozen stocks left. So we're always adding. We don't voluntarily drop too many stocks too often. It's only when they get very small. Does Value Line cover fixed income ETFs? We have an ETF product that has a screener where you can sort for fixed income. Here's a question. Can I receive alerts regarding insider transactions? No, that is not one of the alerts, but we do provide insider transactions as one of the modules. So you can see what insiders have done lately. Please note all the cells, they tend to buy options in the future, so you only see the current cells. Insider transactions is a good thing to look at when considering a stock. Is there a way to backtest results of the portfolios you put together? Upon request, we do have performance stats, but the model portfolios, with the exception of aggressive growth, have been around for 20 years or so on average. So we have a lot of actual performance stats, not back-tested. All right. How often are these webinars? We do them once a month. Lately, I've done a few focused on specific products. We'll have others that are just maybe a stock recommendation or something a little bit more focused, but they're once a month. How is our PE ratio calculated? All right. So for Nexstar, I'm assuming we're referring to the 7.5. We use a mix of actual historical results and our future estimates. So it's typically 3 to 6 months of the last reported quarter or two, along with the next 6 to 9 months of our estimated earnings. We think it gives a better interpretation of the true value of a stock relative to the earnings. All right, I'm going to stop right there. Thank you so much for participating. Thank you so much for all of your questions. Take care.